All right, what is going on, Discord and YouTube family, and welcome back to another edition of Market Review with me, T. Hobbs. I know it's been a little bit, but I've been very, very busy. Got a lot of things going on in my personal life, but trying to make it work with all of it together. So whenever I get the opportunity, especially on Saturdays, I try to jump in here and definitely do a market review on the previous session. Have been trading basically every day. Uh, on the days that I can. On the days that I can't, I don't really do a pre-market plan because I don't plan on trading. And I try not to trade without a pre-market plan. So Friday, I was finally able to get in here and live trade with the Discord. So I'm gonna go over some of those trades that I took, kind of how I was viewing the market, and obviously we'll break down the pre-market plan. Let me just turn off these executions from my paper trading escapades. All right, so let's bring out the pre-market plan here, and I'll go over the things that I put in for last week or last Friday. All right, so first and foremost, last week, our top-down analysis was pretty spot on. I mean, we called for a potential like short squeeze up to these highs. And although the Dow Jones didn't really squeeze, the NASDAQ and ES definitely squeezed a little bit. And then, obviously they ended up pushing down on Friday off the news, right? So we ended up getting about a little less than 3.62%, but that's because the majority of the time we spent the time in consolidation, right? So what was I looking at? My current conditions of the markets were, I thought that this was a bearish retrace of a bullish trend, because I mean, that's what it was until these lows break, until this low right here from May 23rd breaks. That's the dealing range, right? That's the dealing range low that brought this high. So everything down back to this low is going to be a retrace of the bullish trend. The trend doesn't break for me until we get below May 23rd's low. So although we're selling off, it's still bullish until this low breaks. That's how I'm looking at it. All right. So as long as in the intraday though, as long as we stayed above 42,193, which was all the way down like right here, like I think we broke it right at the end of the day. I wanted to be bullish above, and I wanted to be bearish below 43,002, which was all the way back up here. So as long as we stay below 43,002 and we stay above 42,193, I wanted to be bearish and bullish, right? How was I looking at the market? Like when I write in the macro, what I'm doing is I'm giving myself a summary of what's happened since the last time I was in the market, right? So the last time I was in the market was obviously the day before. So overnight we had an aggressive sell-off after the news of the war hit. So that's what this big candle was. Bulls appear to be rebalancing price, so I want to remain bullish until we reach settlement price. I'll talk about that here in a second on the other instruments, because this was the plan for YM, but this was the exact same plan that I had in the event that I was trading the S&P or ES. Hang on a second, my son's knocking at the door. All right, sorry, I had to mute real quick. My son was in need of services for the phone. Anyway, so settlement price was going to be important because that's what I wanted my target to be. And on most instruments, not named YM, we went to settlement price. So the thesis was spot on, and it worked for 2 out of the 3 instruments, right? So failure at this level, I still want to short targeting the overnight chessboard low, right? So that was my plan, but I also told the Discord when we met, you know what I mean, if you come in here before the session starts, right, the pre-market, I go over exactly everything that's on this picture. And sometimes I don't really detail it in these little boxes. But the big thing on this picture was this blue box. And this blue box was resistance. And I told the Discord, I said, if we can't get past this level, we're going straight through the end wall, right? Like that's just it. If we fail here, we're going to go straight through the end wall. And that's exactly what happened. So my range over from the previous session, the PM session, was 43,002 to 42,955 at the high. And then the low was 42,884 through 42,792. the overnight range, which is essentially where we dropped from, right, to where we started the day, which is 42,945 at the high way up here, and then 42,894, and then at the low 42,295 through 42,190. My extremes were the daily demand zone and the 4-hour fair value gap. And because we've been in this tight consolidation, the market just has not been testing the extremes on the higher time frame. Therefore, we're trying to build the liquidity to go to either the bearish side or the bullish side. Nobody truly knows how it's going to be delivered, but we do know objectively we have been extremely bullish. And until these lows break, I'm not going to change my thesis. Okay. All right. So let's drop down to the 5-minute because I want to show you where this resistance level came from. Because some of you may be wondering, like, okay, how did you know that this was resistance? It's simple. Whenever I draw my chessboards, I start on the 15-minute. But if I don't see any significant consolidation, which you can't really see on these 15-minute candles, if I don't see any significant consolidation, then I'm going to drop down to the 5-minute and try to find consolidation, because consolidation is a sign that the market paused and it found an agreement, right, between buyers and sellers, either indecisive or they decided to sell it down lower. In this situation, we consolidated here and the market decided to sell it down lower. So I knew that the bulls had a job. They needed to get above this high in order for us to go higher. Well, if they couldn't do that inside of time, then I'm looking to short the market. Essentially, when we came up here at 8:30, I took the market short at 580 or 568, I think was where I got in. Yeah, 42,568. Okay, I put my stop above here, but we had the New York open, and my thought process was, okay, I'm going to take profit and then look to short at 582 again, or 585. So I did lock in profit, but then I got FOMO'd into going long here. So what ended up being, what should have been one short position straight to the downside, I ended up foo-barring this trade, and it kind of frustrated me. And I'm going to tell you what happened. So we broke structure here. I took profit for 300 bucks. I got in long here. I took profit for 300 bucks. And then the market shorted straight down. The reason why I took the longs here was it was my fault, because I used other instruments, i.e. the NASDAQ and the ES. I was paying attention to them and they were ripping. But the part that I didn't take into consideration is they also did not break structure. I'm going to show you that here in a moment once we go through it. But anyway, what I should have done is got out of my position short and then re-entered, just like my plan said, right at my level, and shorted the market right down to this level. That would have been a very, very clean trade. I got frustrated with YM and went over to start trading ES, but before I left, I took another trade long and I entered at 42,311. So I got long at 42,311. My stop was below here, but once again, I got scared out of my position and I got upset with the Dow because it just wasn't moving as aggressive as I wanted it to. So I ended up cutting this trade for, I think it was like $200-300 loss. I was like in 2 minis. And then I went over to the ES and I took the same trade. But of course, right after I left, right when I left, that's when the market took off. But anyway, the market traded down into 1050, right at my level, the overnight chessboard low, right off the pre-market plan, into the end wall from June 1st. This is a buy. I just got scared, right? Like I'm human, right? So my analysis it was spot on this day, but I'm human. I just got scared. So the market reversed right at 1050. And then right here at these highs, I was done trading at this point. I had made my profit on ES. But right at 1150, I was watching this trade. I just didn't take it because my account was locked. I mean, we rallied right into 1150, right back to the same spot, right? Which essentially I think is actually turning us bullish, but we'll see. But anyway, we rallied back up into the same spot, broke structure again, came back up and retested 50% of that range into my other macro, and then just started dumping. If you're wondering what this blue EMA is, this is the 50 EMA. It's something that I'm testing out. I've been doing a little research on exponential moving averages, and the 50 is one that I'm starting to really, really like. But you'll see it on my chart from time to time. It doesn't change anything in my system. It's just things I'm working on to hold my trades longer. Anyway, so then we come down to the PM session, and this is where things need to shift for the bulls, right? Or, if the bulls are going to take over, this is where they need to take over. We have this fair value gap right here. And a lot of people are going to be looking to get long inside of this fair value gap. But you got to ask yourself before you take this long, The market's been consolidating at the lows all day long. Do you really think it's going to come down here and just completely flip? The answer is no. And the reason why is because consolidation at the lows is actually not bullish. It's very bearish. Consolidation at the highs is not really bearish. It's actually really bullish. It just depends on what level of the trend we're into. At this point, we're in extreme premium, as you could tell by looking at the daily or the weekly time frame. So the market got really bad news. It's in premium. It's trading below the 50 EMA. We're approaching the weekly and we're trading below the weekly. We're trading below midnight. We're rejecting midnight. This is bearish. These are all bearish signs you have to pay attention to. The market rallies up into 130, fails to get a push, and then immediately drops. And what is it going to target? Just like I said in my pre-market plan or my pre-market prep, it's going to target this end wall. It takes out this end wall, goes back up here and fails at the end wall. And then going into Monday or Sunday night, we'll probably get a cap down. Honestly, like this market is looking extremely bearish and headed back to this daily demand zone where we may be able to find buyers there. We'll see what happens if the conversations about war increase. I expect the volatility index to keep pushing us down further. So I'll go over to the S&P, not because I made a pre-market plan on it, but because I did take trades on it. And I'll kind of give you my thesis on my pre-market plan, what it would have been, right? So if we're looking at the S&P 500, you'll see that I wrote the same thing because I chart all three in the event that I need to switch midday because I don't like what's going on the other instrument. Overnight chessboard low, overnight chessboard high, and then I'm going to turn on settlement price because settlement price was very relevant in today's situation, and really it's relevant every single day, right? So if I turn on settlement, I turn everything off, you can see settlement price set right up here at 60.50, okay? But before we got to settlement, we had the previous day's settlement at 60.29, and this settlement price lined up with this inefficiency. So for me, this settlement price was not something I was going for because I was looking at the structure in addition to settlement price. The structure was telling me we'll close this inefficiency and we're coming back down. Because we broke this low, I'm anticipating the market shifting bearish. So my target on the trade was 60.29 and my first target was 60.16, which was like right at these highs right here, right? And you can see I posted that trade in the Barber Talk and you can see exactly what I did. So at first, I was actually kind of confused on which direction I wanted to take the market. You can see that in my executions where I shorted the market twice on this downtrend. Well, the second time I shorted it, I was actually in profit, but my brother came to the door and I was talking to him for like an hour. And if I was here, I probably would have cut the trade and just went short, but that's neither here nor there. But anyway, I got short two minis. I got stopped out twice. And then when I came back from talking with my brother, we were right in this area here. And I think I took the market long at 59.91.75, right? And I was targeting monthly settlement, which was 60.16, right? I got out of 15, I traded micros. So I was in 30 micros. I took 15 off here, right? And then we rallied into my next target, I think was like literally the high. I think it was like 60.28 or 60.29. And I wasn't even here when this thing hit profit. So when I came back, I saw that my target that got hit and then the market immediately reversed right inside of this macro that I created or whatever, right? So, and then when we got up here, although we didn't make it to settlement price, we had done everything structurally that I needed the market to do. We also had tapped into something that I use on Fridays, only Fridays. I go to the weekly candle and I fib it out. If we've had a significant movement, the reason why I do that is because it's telling me what the current weekly 50% is, right? And that's what this purple line is right here. And I almost targeted this level, but I ended up targeting just the inefficiency and the previous settlement, right? And thank God I did, because right when it got up there, it failed to hit the current weekly fib and then traded away from it pretty aggressively, right? The market ended up trading below the previous day low, right? And then pushing down back into basically the London lows. So the ES and the NASDAQ were much stronger than that of the Dow Jones to the upside. So they didn't fall as much on the way back down. And you can see if I use that same plan over here on the NASDAQ, it was the same thesis. The only difference is 350 price or 550 or 350 price. Basically, London lows played a very key factor in these two instruments, and they really didn't on the Dow Jones, right? You can see these are the London lows right here, and you can see like the market every time it came down here, it still held, right? So I don't know what that means for Monday or Sunday. I'm looking for more downside, but we got to get out of this area. Like the bears really got to push us out of this area, because again, the low that was put in on the NASDAQ, I'll give you a little nugget into the top down analysis. This low right here is so important. And the market came down here and created just perfect equal lows here, right? So I'm hoping that the bears want to take out these equal lows. I'll be doing an analysis on Sunday to kind of break down how I'm viewing the volatility index in relationship to all of this as well. But ultimately, what I wanted to say about the NASDAQ is it was much stronger. And like I said, this is what tripped me up on my ES trade or on my YM trade, because I was watching all three, which I normally do, but I didn't take into consideration that these two actually broke this consolidation from the 5 minute, right? And I'll go ahead and show that area here. This was the same blue box that was on the Dow Jones that I showed previously, right? It was like this. The difference between the instruments is that right at the open, right, even before the open, look at what the NASDAQ was doing. It was pushing its way into this level. And then before the market even opened, it rallied above this level, right? Like this is the 925 candle. We were already above this level. So now we just needed to sweep it and go higher. I didn't take that in consideration when I was on the Dow Jones. So I should have just stayed short, because that's what the Dow was doing, right? It wasn't going long, it was shorting. So I should have just stayed short on the Dow and then added to the position. But I don't mind looking at multiple instruments. So it's just not a situation where it's like, well, you're just watching too much stuff. That's not it. It's just that I didn't analyze it properly on the instrument that I was trading at the time. But ultimately, the NASDAQ did exactly what you wanted it to do, rallied into the weekly settlement up and tried to push above the end wall here, right? Got to the daily fib and then closed the inefficiency here. Once it closed this inefficiency, just like the ES did, ended up selling off into the close, and again right back below that resistance level where these sellers had defended once before. So I'll be watching this level or on Sunday to see if it continues to hold, because I mean, this is basically going to be our chessboard high right here. So we'll see if this level continues to hold, and as long as the market stays below here, I'm expecting more downside. So those are my thoughts on the NASDAQ, the S&P, and the Dow Jones as far as the market review goes. So hope this helps you guys. If it's helping you, leave a comment down below. If not, it's all good. I'm gonna continue to put them out anyway, because it's my personal journal. That being said, my name is T Hobbs, and this is the market review. I'll catch you on the next one. Peace.